Hi, everyone. I'm excited to be in conversation today with Chris Abkarians and Nikhil Agarwal from Juno. Their company provides financial aid options for college students as well as grad school students, and happy to be discussing all sorts of questions around financial aid today. So welcome, Chris and Nikhil, and thanks for making the time to join us today.
Thank you, Jessica.
Yeah, thank you for having us.
Great. So just to get started, it'd be wonderful to learn a little bit about each of you and the journey that brought you to Juno. Why don't we start with you, Chris?
Sure. So Juno started as a way to help really myself and my classmates pay for business school. But before we got there, I spent a few years in management consulting, and then a few years at Netflix, focused on licensing different television shows and on the data analytics for predicting what people would want to watch. Don't blame me if you can't find anything to watch. After a few years, I decided it was time for a new adventure, applied to business school. Was fortunate enough to get into school I wanted to go to, where I met Nikhil in a group chat. And I'll let him take the story from there.
Sure thing. On my end, similar to Chris, I was at Boeing for 6 years before deciding I wanted to do something different and going to business school. Once we got to business school, as Chris hinted, we met in this group chat where we were discussing various student loan related options and how are we going to finance our education, things like that. And that's really where the concept of Juno was formed. And it was, hey, can we get together as a community and negotiate for us better rates and options for financing our education? And here we are today.
Great. And tell me a little bit about where Juno is now as a company, and how many students are you serving? What have you been able to get them?
Sure. Maybe happy to take that one. So that first year when Nikhil and I met, we helped 400 students get access to the cheapest student loan rates through our group purchasing model. And 2 years later, that's now about 27,000 students as of today. And instead of covering business schools, we cover all schools in the United States.
That's fantastic. And it sounds like you're growing really, really quickly. And fantastic to see. So I wanted to start us off with a few questions that actually came in from our students here at Magoosh. Obviously, financial aid, student loans, scholarships, they're very top of mind for students who are going into college. So here's the first one that comes from a student. Financial aid is confusing and overwhelming. Where do I even start in navigating the process?
Maybe we can each answer part of that. I think one of the things that is said very commonly and is really true is everyone should fill out the FAFSA. The FAFSA is sort of the gateway to a lot of the federal financial aid opportunities available, both in terms of grants and loans. So it's certainly one of the first steps people should take in exploring those opportunities.
Yeah, so just to dive into that a little bit more deeply, the FAFSA is just a form that you can fill out for free that most schools use to determine your eligibility for certain scholarships and grants and work study, and that gives you access to apply for and receive loans directly from the federal government to pay for school. And that's something that opens up the application each year on October 1st and closes on June 30th. So you really want to make sure that you get that filled out before June 30th. And you have to fill it out every year that you need help for school. And so because it is a free process, there's really no downside besides the time it takes to fill out that form. And we'd highly recommend starting off there. Now, where do you go after FAFSA? Because that's kind of where a lot of advice might stop. And it kind of will vary, in our opinion, on how active your school's financial aid department is, and depending on how large it is. So we'd highly recommend, in most cases, reaching out directly to your school's financial aid office and asking them really for two things. One, is there a list of external scholarships that people have used to pay for this school over the last couple of years? And a lot of schools will have a list. Some will publish it, and some won't have published it yet, but are more than happy to give it to you. And then second is to ask, how do people actually typically pay for this school? Is there any room for me to negotiate on the rate, on the amount that I'm being asked to pay? Because what we found, and happy to get into it in much more detail, is a lot of people just take the amount that they're supposed to pay for school as a granted number and don't really push back much on it. But we've seen a lot of people have success in asking for a discount on how much they have to pay for that program if they really want to attend.
Okay, so it sounds like the FAFSA is the place to start, and also contacting your schools of interest and having a conversation with the financial aid department. I recently read a story about a student who basically just asked for a discount and got it. Is that something that's commonly happening across schools, or is this kind of a one-time thing? And how do schools even decide who gets that discount?
It's a great question. It is, so we've seen it happen now many times, to the point where we have a portion of our site where we ask people to upload what the financial aid offer they've received for each school actually is. And for business schools and law schools, we have a few thousand data points. So somebody can go in and say, I'm part of the class of 2022. Let me see, based on some inputs that I put, the range of discounts that other students have gotten. So that's, I think, step one is just find out a way to know if other people in that program are getting discounts, and then go ask for it. Step two is, a lot of schools won't say this explicitly, but they reserve some portion of their merit-based or need-based scholarship funds for people who they want to retain as students after they've been admitted. So a lot of schools are already planning for somebody to ask. And it might as well be you, because once you're admitted, if you just ask for some more help, they're not going to rescind that admission. Somebody else is going to ask for it. So it's just in your best interest to at least try.
Great advice. You don't get what you don't ask for, I guess. So other than FAFSA, which is really, the form that students should fill out, are there other forms like this? Are students missing anything kind of after that step?
Nikhil, would you like to maybe chat about Juno for a minute?
Yeah, I mean, there's two ways to kind of think about that question. So obviously, we definitely encourage people to sign up on Juno, because on Juno, we have a sort of listings of scholarships that may not be available, sort of private scholarships. But in addition to that, we pride ourselves on being able to find the most affordable student loan option to fill any gap there is. And this means different things for different people. So for example, the undergrad audience, it's often after they cap out on their federal student loans, then the private student loan market becomes sort of the only option left, and Juno helps you navigate that market to find the best option. On the grad side, it's a little bit more interesting, where private student loan options can actually be more affordable than even the federal options that are available. And once again, here we help students navigate that market, both between federal and private, and find the best combination for any student. So certainly sign up on Juno.
Great. It sounds like a little bit more than a form, but it sounds like a wealth of information is also on there, which is great. So returning to our student submitted questions, you've kind of covered this next one, but there might be a little more. So it's, how can I find scholarships or financial aid options outside of what a college might offer me? So it sounds like Juno has some resources. Chris, you recommended going to the schools themselves. What are other options besides randomly Googling?
A great one is actually run by the US Department of Labor. It's called Career One Stop. And that's where I'd say almost every scholarship we've come across for any person has been listed on Career One Stop. It is free. There's no way for the government to make revenue off of this listing, and it's completely unbiased. And you don't have to input any of your information. So there's no marketing that's going to happen to you after. I think it is really, truly the best overall source to use to find scholarships for either grad or undergrad students.
Sounds like a fantastic resource. So this third question from our students comes from an international student. What are the additional considerations that international students should keep in mind as they're looking to come to the US and finance their education?
It's a really good question, and it's a particularly difficult one because our number one recommendation for an international student trying to finance their US education is to try to find more than one potential source of funding. So one of the larger companies that's been doing this for a while is called Prodigy Finance. There's plenty of people who've used them over the past few years. And a lot of people also speak to their local banks at home and ask them what their financing opportunities would be to get money to go to school in the US. And an important thing that we've learned over the last year is to make sure that you have just more than one option lined up, because there's just fewer lenders out there who are willing to work with international students in the US. And sometimes they'll expand their focus on the market, sometimes they'll shrink their focus on the market. And you just want to make sure that you have the ability to prove to the school that you have the funds to pay.
Got it. So it sounds like it's important to have more than one option and be able to kind of, I guess, diversify your portfolio, for lack of a better term.
The one thing I might add to that is thinking about foreign exchange risk as well. When you're comparing, sort of an interest rate per se, or the cost of a loan in one country versus another, unless the loans are denominated in the same currency, they are actually two different rates, even though they might look like the same number. I think the math is sort of too complicated to dive in here, but sort of conceptually, one should keep in mind that interest rates on one currency versus another are not equivalent, and inflation and things like that should be kept in mind before committing to one over the other.
That's a great thing to keep in mind. So shifting gears a little bit, a lot of our students right now are high school seniors, and they're applying to colleges like kind of deep in the application process, or kind of starting this fall. And we hear a lot about safety schools and dream schools. So what priority do you think students should give to affordability when they're selecting a college? And how does that play with this notion of safety schools and dream schools?
So this is certainly personal opinion. I really don't think that you should let the affordability prevent you from applying, but it should weigh heavily on your decision after you've gotten it. So there's a lot of people who just don't apply to certain schools because they don't believe they'll ever be able to afford it. Many of those schools even offer application waivers. And so by not even having the option of knowing if that financial aid office might help you out, you've kind of already settled that question for yourself. So step one, I would honestly say, apply, try to get an application waiver and just find out. A lot of your dream schools are the ones who typically have the most financial aid to provide and the most ability to actually change the rates or the amount that they would charge you. And then second, let's say that you've gotten into the safety school in your dream school, but the dream school is a lot more expensive. You should first try to negotiate with that dream school, because you've gotten in, they want you, you might be able to actually get them to bring down the amount they're going to charge. But then also being realistic, let's say that they don't bring down that amount. If you have an idea of what you want to do after school, I really think you should look into what the employment report of graduates from that school looks like. Get a sense for what are the actual amounts that people who study what I'm planning to study make after they graduate from one school versus the next. And then do the math on, okay, how much do I think I actually might earn if I do this? And does that make sense for the incremental costs that I would have to take on to go to this other school? In a lot of cases, there might not be that much of a difference in how much you would make after. And so you might just be paying extra for something else for not that much. Sometimes it might be a big difference. So there's not really a simple answer there, but I think in general, as a framework, I would try to hold to.
Great, that makes a lot of sense. Apply more broadly, and then when you're in the decision-making phase, you can try to negotiate, going back to what we covered earlier, asking for a discount and figuring out your financial aid and what that looks like. So say that you are in that stage now that you are comparing financial aid offers from schools. What are some strategies that you would share with our students about how to compare these financial aid offers?
One, data is your friend. Knowing what other financial aid offers people with a similar background have gotten for that program is kind of the biggest black box. It's hard for you to know. We've set it up for lots of graduate students, and so we've helped a lot of graduate students compare that. But I also know that for many programs, people are discussing this on Reddit, on College Confidential, on different forums, and are typically willing to talk about it with one another. And so I'd make sure to find a way to find out, like, what is the baseline that other people at my school are getting, and how can I make sure that I'm at that baseline or better than it. And then second, I mentioned this a little bit before, but when you really have a place that you want to go to, and there is somewhere else that's giving you more money, being very upfront and transparent with that school about, hey, I really want to go here and I will, but I just need to make these numbers come down to X or to Y. You'll pull the ball in their court to make a decision. And I've said this to other people in other contexts. As human beings, we just don't feel comfortable pushing others. But in this case, you really should not stop asking until you feel at least a little bit uncomfortable with the answers that you're getting. They're not going to rescind something. Nothing negative is going to happen. I really believe that only positive things can happen. So you've got to push yourself to get uncomfortable with that.
It sounds like students could really benefit from learning some basic negotiation skills and beefing up their confidence before making that phone call. But again, asking for what you need, being upfront and having that conversation.
Yeah.
So one concern that we hear sometimes is around financial aid and credit in the future. Your credit score, which of course impacts everything from buying a home to qualifying for other types of financial aid in the future. So does financial aid actually impact future credit worthiness?
Just to clarify, we're talking about grants or like loans. So usually when we think of financial aid, there's the grants and scholarships and things like that. And I believe that has zero impact on your creditworthiness. It's not something that shows up, for example, on a credit report. Loans, however, whether they are federal loans or private student loans, they do show up on your credit report. That's not to say that they necessarily have a negative impact on your overall creditworthiness. In fact, one of the things lenders in the future might look for is, do you have a history of taking debt and responsibly paying down that debt? So often people use things like credit cards or student loans as a way of demonstrating that for a future purchase. At the same time, there are other factors lenders consider, like a debt to income ratio, which you have, the more debt you have, the higher your debt to income ratio, the less creditworthy you might appear from that one metric. So I don't think there's a clear answer in terms of how loans might impact your creditworthiness in the future. And I guess the other thing to consider is a very large population has student loans in the United States. And so it's sort of part and parcel of going to school in the United States.
Sure, it's a common shared experience. Absolutely. So in your experience, should students who need financial aid avoid schools with need-sensitive admissions policies?
It's a good question. I kind of harken back to the earlier answer in that even schools with need-sensitive admissions policies still have some level of aid that they would provide. It just might be less likely that they would let you in. And so the worst you can hear is that you have not gotten in. That, again, needs to be caveated with don't spend a lot of money on applications to a bunch of schools. You should still focus on the handful that you do really care about. But I wouldn't let the fact that they consider need to prevent you from applying to somewhere that you think is a good fit for you.
Okay, so it sounds like fit first, and then need is a consideration, but really finding the schools where you think you'll excel and that really interest you.
Yeah.
Let's jump into a little discussion about types of loans. So can you illuminate what is the difference between a PLUS loan and a Stafford loan?
Sure. Let's maybe just start off high level with kind of how student loans in the US work. Every year, there's over $100 billion in student loans that are taken out across the entire United States. And about 90% of that is loans that are taken directly from the federal government. Now, let's zoom in on that 90%. Again, about 90% of that is undergraduate loans, and about 10% are grad loans. Now, let's zoom in really quickly on undergrad. So if you're going to undergrad in the US, you've got a few different options to get loans directly from the federal government. Some of them are commonly called Stafford loans. Another word for it is direct subsidized or direct unsubsidized loans. What does that mean? These are loans that you can borrow up to a certain amount per year directly from the federal government. The amount varies on a few factors, but it's generally under $7,000 per year. And the rate that you get charged on these loans is set by Congress. Today, the rate is 2.75%, so it's pretty low. And this is the most common set of student loans in the US. It's your direct subsidized and your direct unsubsidized loans. Now, when somebody hits a cap as an undergraduate student on how much they can borrow from the government in a given year from direct loans, either their parent can take out a PLUS loan or they can take a loan from the private markets. And the loan for a plus loan has another rate that's also set by Congress. And there are private loans that can often beat that rate. So that's kind of how undergrad student loans work. When you look at graduate student loans, which is about 10% of all the lending that happens, you have indirect competition plus loans again. So plus loans can be both for parents or for grad students, and it's the same price for both. And you have private student loans that compete with those. Now, depending on your credit profile, there's a lot of people who, let's say, have good credit, who have a co-signer who has good credit, who are able to get loans from the private market that are cheaper than a graduate plus loan. There's a lot more detail about how all this works and the way to pay it down, but hopefully that's an okay overview.
Thank you for that overview. And it's definitely a complicated world. I guess if we kind of talk about one undergraduate student who needs financial aid. So it sounds like first step is filling out the FAFSA. And then could you walk me through kind of the next few steps if assuming that student and that family needs more aid to go to the school they want to? When would you start kind of thinking about a Stafford or a plus loan? When would you layer in the private loans? What's that journey look like?
Nikhil, do you mind taking that, or do you want me to?
I can. So once the FAFSA is filled out, the financial aid office determines, this sort of send you a financial aid award letter. And these often will contain the federal loans included in them. And as a student, it's sort of a natural process you would follow with the financial aid office to accept these loans or decide, hey, I want to use some alternative like a private student loan. The grants are also included in that same financial aid award letter. So that's really the moment you figure out, okay, hey, this is what I am already getting in terms of grants and scholarships. This is the rest of my need. And these are the set of loans that are going to fill that need. And that's sort of the moment you can consider whether you want to change that mix in any way by, for example, coming to Juno and considering comparing your private loan options with the plus loan option and saying, hey, this private loan option is cheaper, why don't I take that instead of this plus loan option, or sticking with the plus loan option. So I think that would be the sequence of events. Fill out the FAFSA, get your and do any sort of private scholarship applications, then receive your financial aid award letter that includes the grants from via the FAFSA and the private scholarships. Whatever leftover amount is there, you look at the stack of loans that are covering that amount. And if you like that stack, great. If you don't, swap it out with some loans from the private market.
Got it. Thank you for that thorough explanation of the journey. So in your experience, are you finding that families are typically kind of taking whatever financial aid package is offered by the schools, or do families also do a lot of research? Because it does sound like a lot of that responsibility is just on them to know that there might be a better option. How well versed are kind of American families in this process right now?
That's a great question. To answer the end of it, to use a data point that there are millions of families who don't ever fill out the FAFSA until it's too late because they're just not aware that they should, or who let it slide and think that they can do it after June 30th. So there's always more that can be done for people to be more aware. how to find themselves on the best version of that journey, getting started as early as possible and not solely relying on getting the letter from the school, I think is pretty critically important. So to anybody who's watching this right now, you're already ahead of the game. In general, we've seen, so Nikhil and I we spend every day, at least an hour a day, just talking to different members and different families. And there are not that many who are aware that when they do need to get a private student loan, that they can compare rates and that they can shop rates between different lenders. It's something that's just much more popular for people to do for car loans and for insurance and for other things. But a lot of people take the private loan rates for granted and assume that there's not that much difference between them. We've just found in general that there can be massive differences between what you get from one lender versus the next. And it's really impossible to predict that sometimes until you've just spent a few hours looking. And at the end of the day, what we try to do is do as much of that work for you as possible, reduce that time to getting to an answer, and just trying to hammer home that before we started Juno, I might have actually spent more time researching the difference between the iPhone 12 and 11 than I did looking into the various terms and conditions of the student loans I was being offered. But one of those is a lot more expensive than the other, and the other is an iPhone. So I'm thankful for this opportunity to get people to just start thinking more about shop rates and make sure that you're making the best decision and spend a little bit more time to do it.
Absolutely. So you mentioned that there are a lot of differences between different types of private loans. So what are the kind of variables there? So there's interest, there's repayment. Could you outline just the types of differences that you've seen within the private loan market?
Yeah. I saw you just go off mute, so if you have an answer ready, go for it.
Yeah, sure. Happy to help there. I think of the differences this way. One of the first things people consider when they look at a private loan is whether it's a fixed interest rate or a variable interest rate. In a different economy, that most people would have gravitated towards a fixed interest rate. We are in an interesting time right now where variable interest rates are somewhat behaving like fixed interest rates, or at least are expected to. And as a result, we've seen a shift of a lot more people considering variable rates, where in the past they would not have. And I guess I should explain what a variable rate is versus a fixed rate is. A fixed rate is one where when you take the loan, you know what the interest rate is going to be for the life of that loan. A variable interest rate is one where there's a formula to calculate the interest rate, but that interest rate can change over time. And it's usually tied to something like the 1 month LIBOR, which is the benchmark interest rate. So as that benchmark changes, the interest rate you are charged may also change if you take a variable interest rate. So that's one of the early considerations. The second consideration is, as you mentioned, repayment plans. With private student loans, we typically see around 4 different types of repayment plans. And the main difference between them is how much are you paying each month while you're in school. And this can range from sort of making full payments, like paying down some part of the principal and all of the interest each month, or you might be paying some subset of that. So we see plans where you have to make no payments at all. This is similar to the federal student loans, where you don't make any payments while you're in school, and the first payment you owe is a few months after you graduate. So that same option is available with private student loans. And the additional options tend to be, you can make a small payment like $25 a month or $50 a month while you're in school, or just pay off all the interest each month as it accrues. So we see the repayment plan options, and finally we see term length options. So when you're thinking about paying back the loan, you might look at it and say, hey, this amount on a per month basis looks kind of big, right? Maybe it's daunting. So you might say, okay, instead of paying off this loan in 10 years, I want to pay this loan off in 20 years or 15 years. Or vice versa, you might say, hey, I think I can pay this loan off sooner, so I'm going to look for a 5-year term. And all of these options come with different interest rates. So for the same individual borrower, as they choose between each of these options, they'll see a different interest rate. It's pretty typical, for example, to see the 20-year loan be at a higher interest rate than, say, a 10-year loan. And this is sort of just accounting for various factors on the lender's side, risk, things like that.
Great, thank you. Definitely a lot for families to consider. So you mentioned that this year has been a little strange, with variable rates maybe even looking more appealing than fixed rates. This year has looked strange in many ways. How has COVID, or just a lot of 2020 and things feeling very much like they're in upheaval, how has this impacted student loans?
Quite a bit. So the biggest impact is that federal student loan rates are actually the lowest this year that they've ever been. And that's because federal student loan rates for undergraduates, graduates, and parents are all structured so that it is a fixed percentage above really how much a US Treasury bond trades for. That number is the lowest it's ever been, which means student loans are the lowest that they've ever been. And similarly, on the private student loan side, you're seeing lots of rates that are, especially on the variable side, lower than we've seen them in the recent past. The other big change is if you've already got student loans, you've recently graduated, or you've graduated at any point, student loan refinancing rates, so basically getting a new loan to pay off your old one, is also cheaper now than we've really ever seen it before. And so across the board, it's cheaper to finance school. Unfortunately, we're not seeing tuition reductions as much as I wish I might have seen when I was in school. But the good news is that at least the cost to finance that is down. Maybe
some good news from this year, finally, for college students and families. So it's been wonderful chatting today, Chris and Nikhil. I've learned personally a lot about financial aid and student loans. So parting advice, what pieces of advice would you give to any student who's applying to colleges this year? What's your top advice for them?
Top advice would be, from the beginning of the conversation, negotiate the costs before you move on. And please don't stop until you feel uncomfortable in how much you're asking. I'd say second, just make sure to get smart about your financing options. I just strongly encourage people, whether you might need a loan or not, to check us out on joinjuno.com, and really it's kind of as simple as a mailing list. You tell us a little bit about yourself and where you want to go to school, or where you are going to school in your grad year, and we will let you know what the best financing options we found for your profile look like. And there's no cost and no obligation. We don't send your data to anybody. We'll just try to send you an email closer to when you have to pay for school with all the information about what your options look like. And then third, I guess just try to have fun at this point, and don't be too stressed out about it, because whether it's you or your financial aid office or somebody else, there's a lot of people there who are going to help you through the process. And it can kind of feel like you're on an island alone trying to figure out the financing aspect of it, but it's not true. And every other person in your class feels the same way. So just ask other people, get less stressed out about it. And if you need help, we're around too.
Yeah, I think I can't stress that last point enough. Aside from asking for sort of financial aid, asking for help, I think we were in a pretty fortunate position when we joined school, where we were in this group chat where, it was a pretty comfortable topic to discuss with our classmates, what we were thinking about financing it, how we were thinking about financing our education. And I don't know if that's true everywhere, but someone who sort of creates that spark, asks the first question, and is sharing, I think that creates the space needed for that conversation to happen. And I think that can be a huge help in sort of as a community figuring out, hey, for all of us going to the school this year, this is the best option. Or this among this set of options, we're likely to find our best option. In some ways, that's how Juno works. We work with our members all the time. We ask them for help with thousands of things. And it's really a community where we kind of help each other out. So create that little community for yourself in your school. Come join Juno and be part of that community. But be vocal, ask for help, either directly in terms of financial aid or just in understanding your options.
Wonderful. Well, thank you so much to you both for making the time today and for the wonderful conversation.
Thank you, Jessica. Really appreciate it.
Having us. It was really fun.